It's Jim Check with Kelowna. I'm here with Lennie and Aaron, Rampone Marsh Mortgages.
Yes, hello.
The big day.
Oh,
the big day. Finally.
Great day.
Finally, a bigger cut, right?
Yeah.
Anticipated cut, though, right? Some people even call for 0.75.
That would have been fantastic. I think we talked last time. We thought it was going to be the 0.5, which is great. And I think that this whole year is a whole percent now, right?
Yeah. 1.25.
1.25.
Yeah, we're at 3.75 now. So it was a 19-fold increase. We're only at 14-fold now.
Right.
That's true. Well,
But headed in the right direction, though.
Headed in the right direction. So long-term rates, guys, are they starting to come down? What can people find? Like if you're a good customer, what can you find in a 3 or a 5 year for a fixed right now?
if you're looking to do a fixed rate right now, 3 year, you're going to be, depending on if it's insured or not, there's some criteria there. You're probably going to be around 4.79, maybe 4.69 for a 3 year fixed. If you want a 5 year fixed, you're getting down into like 4.24.
When are we going to see the 3 number? Like, what do we need to see to get into 3.75s and stuff like that?
Well, there still has to be some more cuts. I would say this time next year, we're probably going to be in that range. I hope we're going to be in that range.
So just a matter of like historical reference. Prior to when the Bank of Canada rate was 0.25, what were the mortgage rates that people were getting? Like at that, like a 5 and a 3 year.
The 3 year wasn't popular then.
Yeah, because it was variable, right? At that point, right? Everybody was kind of
lots of people were taking variable, and those were under 2%.
Yeah,
and as was the fixed got under 2%.
Yeah, I think my son got a 1.8 or something like that. Right?
I talked to a client that's coming up next year. 1.59. That's probably
1.59. How long was that? Like a 3 or?
It was 5? A 5 year.
5 year. 1.59. Yeah. You pay money for that right now.
No doubt, hey.
So that's a big thing in Canada, right? Like everyone's talking about this landslide of mortgage renewals coming.
Yeah.
It's all those low rates that we're taking in 2020.
To put that in perspective, like 1 point on $1 million mortgage is $10,000, right?
Yep.
1 point is $10,000. And then so it went up from 0.25 to 5. So that was 4.75. So $47,000 a year difference in a mortgage, $1 million mortgage.
Correct. On the surface, yeah.
Yeah, I mean, just
Am I wrong on
that? Roughly, like rough numbers, right? Because obviously it goes down or goes up depending on if you're not paying, your interest even, right? So
yeah, well, rough numbers. So today, if you had, so there's a 50 point cut.
Yeah.
And
50 basis points.
So on $100,000, that's roughly a drop in $42 a month.
Yeah. Isn't it $150 per 0.25?
150
a month, 0.25?
No. 0.25 is like $14 a month. So, anyways,
divided by 12.
Right.
It's big news, and if you've been, it's everywhere, all over social media. Realtors, mortgage brokers, everybody's.
The 0.5 should stir some interest, right? The 0.5 cut.
That's the hope, and I think that's why the Bank of Canada did it. They're trying to.
Well, that could be that, and plus the Americans did it, right?
Well, there's that too, but I think Canadians are feeling it.
But inflation is 1.6. Their target is 2.
Yeah.
So there's and their target rate is 2 as well.
That's right.
So if the rate is 1.6, then there's not much logic to hold it above 2.
Well,
I know they want to step it down, like take the staircase down. But their goal is to get inflation below 2 and the rate to 2. Like the Bank of Canada rate, not the mortgage rates, but the Bank of Canada rate.
That's right. And so the Bank of Canada rate has a little while to go.
Yeah, it's at 3.75 now. So you would say that there's a 1.75 to play with there.
Well, I don't know if the Bank of Canada sees it that way.
I mean, they've said that long term that's what they want to do. They want the inflation rate to stay below the 2.
Yes,
and then they want the target rate to be in there too.
That's right. Their overnight target rate. so that's why a lot of economists and lenders are stressing to take the variable rate today versus the fixed rate.
As it keeps marching its way down.
That's-
Marshing its way down,
that's
right? Marshing
right.
its way down.
Yeah, marching, yes. No, but that's it. Like, you ride the wave down. Like,
Yeah.
you know, a lot of people have, you know, those that have stuck with variable through this, you know, all these increases, like myself.
Felt the pain, like myself,
There's
right?
been,
Felt
there's
the
been
pain.
some pain for sure, but
Yeah.
that, you know, better days are here. So
And you know, over the course of the term of the mortgage, the variable rate has outperformed the fixed
Usually
rate
plays out
over
well, right?
over
Even-
the time. Exactly.
Even this past 2 or 3 years of just like excruciating pain for a lot of people.
That's right. There's
It
going to be a
should
little
kind of like it should kind of even out, right?
And what everyone has to realize, Lennie and I talk about this all the time, is a mortgage is a marathon, not a sprint. Like, you got to think you're trying to pay this thing off 25 or over 30
Yeah.
years,
Yeah.
not over 3 years.
Yeah.
So it's just a matter of having the proper strategies and advice in place,
Right.
so that you can get to zero
So
as quickly as
have
possible.
some of those other things that they put into play help people, like the 30-year mortgage?
Great question. Those new changes the government came out haven't rolled out yet. December
Oh, so they haven't rolled out yet.
15th is the first
December
one.
15th. So for everybody that doesn't know, on December 15th, they're increasing the cap. Before, you could put 10% down on $1 million. Above $1 million, you had to have over 20% down. Now you can go to 1.5 million on a purchase price
That almost gets you a
And
house in Kelowna,
and
right?
have less than 20% down. And you can do a 30-year amortization, where
Right.
first-time home buyers could only do
That's
a
pretty much the
25
sweet
year
spot
before.
in Kelowna right now, though, too. In that, like, that gets you a very nice home in Kelowna in that 1 to 1.5. Right?
It does, and not everybody has the 20% down, so it'll be
Yeah.
interesting to see how that does for the local market and a lot of markets that the single family
Because
dwelling gets to $1
10% on
million.
a $1 million home is $100,000.
That's right.
Right.
Yeah.
So then 20% is $200,000.
That's right.
So that's a big jump, right?
Yes, no. So it'll
And-
be interesting to see how that plays out.
Yeah, one other rule that's coming into place in January is, and it's going to be very applicable for here in Kelowna, is adding a second dwelling to your home. So you can
You can take that ink.
you can refinance your house now up to 90% of its value to pull money out to build a carriage house or
Develop a suite.
develop a
in your-
suite.
those funds have to go for the secondary
to that.
residence.
Yeah,
Yeah,
nice.
Yeah.
But that gives you like a mortgage helper, though, too, right?
absolutely.
Yeah.
I mean,
Yeah.
there's lots
And
of
also helps on
places.
resale value.
Helps
it
Helps the
should,
rental
property
yeah.
market, too.
everything.
Help, right?
Yeah.
Help
This
is on
is-
the way. I
this-
heard that song somewhere.
If not, we should make one.
No, but that's
There you
going to
go.
be huge, because there's a lot of these types of properties in Kelowna where you can add that carriage home, or
Yeah.
you can add that second dwelling. So that's a pretty significant rule change, especially in the Okanagan.
Yeah, no, I think that's great. I think that's absolutely stellar.
Yeah,
Um,
it's going to be good.
Getting people into homes is the tough part for a lot of people. The down payment is a tough nut, and they just don't seem to move the limits fast enough based on what the market did, right? You know what I mean? Like
That's
it
right.
was fine, 8 years ago when most of the homes were under $1 million, but then as the market moved away, then it was really tough to work with.
They
right?
had to make changes.
Yeah.
Like, it was just not working.
It's just common
for
sense,
Canadians.
right?
Yeah,
it's common
yeah.
sense.
So it does give Canadians some flexibility
So-
to get into that detached home.
How many more? Is there one more meeting?
One more,
yes.
December 11th.
Yeah.
Yeah.
2-5? 5?
2.5.
Yeah, I'm
2.5.
gonna say 2.5.
I'd like to, think they're going to do another half point cut, especially if we see inflation still going lower and lower. But the conservative part of me thinks it'll probably be 0.25.
What do you think, December?
I'm torn. Like I really would like to see what the Americans are going to do, right? But they probably won't get too aggressive in the second cut because the election. Do you know what I mean? They don't really
Yeah.
want to stick their foot into it either. But I do know that they want to get back, and the Americans and the world actually wants to get that target rate, right? I mean,
Yeah.
they believe that that's where it should be. But I think just like on the way up, they left the easy money policies too long, and they choked the economy too long. And I think they're going to have to go below 2. Like, I think they're going to have to stimulate the economy, because I think there's a lot of really negatives, and we're starting to see that play out in Kelowna with restaurants closing. We're starting to see some of
Yeah,
that play
we
out,
are
right?
seeing
People, you just did a story the other day. 75% of British Columbians buying secondhand,
Yeah.
right? Like goods, right? So it means it's tightening up out there, right?
And there's a lot of economists that have said the exact same thing as you recently, which is why taking the variable rate is sort of the play today.
Yeah, because I do think they've strangled the economy too long. We're seeing that in job losses. We're seeing it in a whole bunch of different things. Like BC's, like our GDP has fallen, right?
Yeah.
Like you know what I mean? Like we've choked this economy, right? And it hasn't worked for the housing prices. It hasn't brought the housing prices down like they said it would. It actually increased the cost of housing, right? Because the mortgages are, because most people live off of a payment, right?
Yeah.
Do you know what I mean? Like,
Yeah.
they don't really even look at the number. Like the same thing when you buy a car, they don't tell you how much the car costs. They're just like, it's only $400 a month.
Yeah.
Or now bi-weekly.
Yeah.
Yeah, you should dive into the numbers a little bit more than that, but
People just
that's
like,
the
can I
reality.
afford?
It's the
Can I
cash flow,
afford this a month? Right. That's. I mean, you guys do some of your numbers off that too,
Yeah.
right? Can you afford that a month? Right.
Yeah.
So it really is. If you want to talk affordability, you got to look at the monthly number. It has nothing really to do with like trying to choke the economy, because it didn't work. All they did was choke the economy.
Yeah.
So
Well, lots of good news coming down the pipe,
Better
though,
times
with
ahead.
the
Better times
interest
ahead,
rate
friends.
cut.
an election coming too in the new year.
Yes. Yeah. Right. Well,
We don't want to get political, but hey, an election's coming October 25th or earlier. And we just gone through an election and it solved nothing.
It did
oh
so.
yeah.
Anyway, we don't want
That's
to
a
talk
whole.
about that.
That's a
too
whole
much.
other
That's a,
episode.
It's totally another episode.
But good news on the mortgage front. So again, if you're looking, best be prepared. Talk to a mortgage broker.
Get pre-approved.
Get pre-approved,
The market
because
is
if
gonna get
the
hot.
market does all of a sudden we get the next rate cut and the next rate cut, a lot of people have been sitting on the sidelines, right, waiting.
And
right?
we've talked to a lot of people, and realtors included, where they're like, yeah, I just told my clients to hold off and wait till the spring. And so the spring, if
So do it
could
just
be
a
hot.
couple months before the spring.
Yeah.
Do you know what I mean?
Now.
Beat the
Now.
rush. Beat the rush. Now. Yeah, you know what I mean? Now. December 15th to help you qualify, though, too, right? You're saying December 15th
Yeah.
is that thing there.
That's
So,
where you do the
You know what I mean?
30-year amortization.
so, but you can get the paperwork going now, right?
This is it. We have one client that we got the approval now. We're going to change it on December 16th to take advantage of the new changes. So.
There you go.
Yeah.
And, these guys take all of December off, right?
Oh, yeah.
Always working. We're always working.
Anyway, anything else you want to add today?
No, just a lot of good changes coming down. Hopefully that stimulates things, and yeah.
This could be our last show, or we could have a continuation. But
To be
we've
determined,
done 12 shows, right?
Six.
Yes.
6?
Yeah, 6 or 10.
Six?
I don't know. We did a lot.
We'll see you again. We'll see you again, friends.
All right. Thank you for watching Kelowna Now.